Good morning, everyone. Welcome back to Schwab YouTube coaching channel for our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner. I'm joining you from a beautiful but crisp Denver, Colorado today. Pleased to be joined by my friend, Mr. Ray Kimbrell. Ray, it's great to see you on this fine Monday, buddy. Glad to have you back. How you doing?
It's great to be here as well. Yeah, I'm back from a workshop out in Sacramento, so Texas is also nice and crisp and feeling good.
It's always funny to me when we get crisp weather in Texas, I know.
Yeah.
Little out of character for you, but nonetheless, we're in what I like to call the doldrums officially with yesterday's Super Bowl ending. We now move into the very kind of slow and boring window of athletics as it relates to the U.S., but not to worry, everybody. We got plenty to cover for you here today on the Trader Talk show, so we're going to get right down to business. Now, before we do, I want to let y'all know we're joined by our friend Brent Moores in the chat. Brent, of course, a fellow Schwab coach, a tremendous coach in his efforts, and you're going to get a lot of great stuff from Brent today. He'll get to comments and questions that Ray and I are unable to get to, but we both will keep an eye on what's happening there. We want to bring your questions into our discussion where we can, so please feel free to post there for the duration of the show. We'll go about 45 minutes in total. If you're not already doing so, we'd also appreciate a follow on X. You can do that for us coaches individually. I am available there at Kevin Horner, CS. You can also follow Brent at Brent Moores, CS. And Ray, do we have you officially on X?
Yeah.
We sure do. Ray Kimbrell, CS is where you can follow Ray as well, right? You post out there periodically, Ray?
From time to time between classes and whatnot, but yeah.
Yeah. Plenty to do that for. Obviously, there's lots of opportunity to be chatting with all of you. So this is a great way to engage with us when we're not hosting for you. So a follow there would be appreciated. Hey, don't forget to subscribe to the channel so that you know that what we're up to all day. Remember, you get live content from us from market open at 9:30 a.m. Eastern all the way through about 4:45 Eastern daily. So hit that subscribe button to the channel. Now, let's get to our disclosure so we can dive right in for you. First, remember that our conversation is exclusively for your information and your education. We do not make recommendations nor endorsements for any approach to trading the market. We will, however, bring technical analysis into our conversation. But as we do that, we remind you that it should only be considered one point of your decision making. We discourage you from basing decisions exclusively on technical analysis. Beyond that, we will take a moment to remind you that we work here with an agenda that runs kind of top-down methodology. What do we mean by that? Well, essentially, we start with a review of our large indices, our broadest, so the S&P 500, the NASDAQ 100, the Russell 2000. Of course, we'll look at the semis, and we've got opportunities to look at some other industry groups and sectors, and then we work into stocks in the news in our final 10 minutes or so. So that's what you can expect from us over the course of the next 40 minutes. Let's get to it. Ray, inevitably, when I take time away from the market, the S&P in the broad market tends to see a little volatility, and it carried last week. If I zoom in on things, what we saw was a pretty good move from the third all the way down to an area that, you know what, could have been validation for some traders to actually be uncomfortable and maybe exiting the market a little bit. But if they were too quick to act, they would have probably not been happy with that decision, given the way we bounced back late last week.
Yeah, I guess I should start with saying thank you. And let me know the next time you're going to take away so I can. So yeah, I totally agree. That's a really strong looking level of support you got right there, and nice bounce. And yeah, I think matter of fact, we talked about it this weekend when we were in class. And yeah, it's a smart thing to do, is to check out all those levels of support and resistance on the broad indices so that you get a feel for it.
It's not easy. No one's suggesting as much, but we had this one-day close below the 50-day here. This would have been Thursday, and it kind of looked a lot like this close here. And we again did the exact same thing, didn't we? Followed it through with a great big rebound day. Ray, can we look at the rebound day and take that to mean more, or do we have anything that we can take from the S&P's big bounce we got Can we look at this and suggest that we are going to higher highs, or meaning is the path of least resistance to the upside here, or is it just too difficult to know right now? Because it feels like we're in a range for basically the last 2.5, 3 months. There's not a lot of action we can take with where we reside right here and feel good about it from a risk reward standpoint, whether you're necessarily bullish or bearish.
Yeah, the thing I'm seeing is still in a general uptrend. All right, all three of your moving averages are still in that uptrend. Short term pull back a little bit because of last week, but if you look at the open right now, look right. If you zoom in, look right where the open is on your short term moving average. Is that a 10-day, a 20-day?
That's 20 in orange. Yeah, 20 in orange. Purple is 50,
and it's right on it.
Yeah,
and so. I kind of like your terminology of the range bound a little bit, but we're still in that gradual uptrend. You know, you're 50, the 200, obviously. And so I think you can take it for potentially getting back up near near that high, that 7,000.
So one thing that I might state comfortably is that I guess if we made a move under 68.80 or 67.80 up to 6,800, if we closed under my white line, then things shift a little bit, right? I think traders would then maybe tighten their purse strings a little bit. They might get defensive. They might build cash under that level. But until then, or I should say, until that occurs, or perhaps a new high close over 7,000, because we've only had that one close at 7,002. If we could actually close over 7,000 with some conviction, I feel like that could be a decision point for bulls once more.
I mean, back through beginning of December, you can see those bounces, and they're pretty hefty bounces as they came off. So I think you're correct with that, drawing that support level where you drew it, and the statement you made. If it does break through that, I think you get some nervousness, but it's holding pretty strong.
But there's nothing wrong with that. I mean, I think the key takeaway is that we traders need to have that plan, right? So knowing, all right, I've closed below a level where I have no comfort any longer, or my comfort is waning, I should tighten up a little bit, or I should build cash. Have some steps as to how you're going to act if one of these things plays out. I think those levels are, like I said, right around 6,800 and 7,000. That gives us a range. If we stay in that range, there's not a whole lot of action there. You don't necessarily have to do anything. Breaking out of that range will offer us some insights as to our potential next direction. What I've noticed, though, Ray, is that things look a little bit different, to say the least, as it relates to the NDX. We obviously pulled back from that matching high. We broke my manual trend line. We've made a slightly higher high, I suppose, if we're catching the low from November. But Ray, the behavior here is certainly different, and it feels like this is tied to, as we're going to see and explore momentarily, the breakdown and component makeup of something like the NDX, which differs a lot from what we get in the S&P 500.
Yeah, and the one thing I'm noticing also is your short-term moving average is crossing down through that 50.
Yep.
And, so that's giving you some indication potentially of some of that, maybe setting up. If it starts getting range bound in that lower section right there, below the 50 moving, and right above, probably right above the 20, rather of the, I don't know, 24.5. The bottom levels of that recent, right through there. Maybe you're looking at a new range for that for a little bit.
Yeah, I think that's a great point. We're below the moving averages, right? We've got the two of the big three, the 20 and the 50. And you got the 20 crossing the 50 potentially to the downside. They're kissing right now. So we're, depending on how today's action finishes, that could be a carry forward. The thing that might be playing out, though, Ray, it could be as simple as just recognizing, we're in consolidation. We have made matching highs, not higher highs. Matching highs just tells us that we didn't break through. We can't call it a breakout, right? But essentially, if we go back to what is September, it's been sideways, and we have a range to work with. It's not terrible. It just tells us that it's not the leading group. We're not getting the push from technology. We're going to see that. We're going to show y'all technology in a bit here, but you can see that this chart resembles what you're getting out of the technology sector broadly and some of the leaders in that space. And it really shouldn't be a surprise to us, Ray, that we're consolidating or doing this. The truth truth is, the fact that we hold the 200-day will tell a lot of investors and a lot of traders that everything is, at least in the interim, still okay. We're just not in the midst of a trend right now.
Yeah, I'm glad you brought up the technology issues, technology sector, that is. Exactly right. I mean, if you look back, the big push that it had earlier has definitely slowed up. You know, it's definitely calmed down a lot, and I think that's a big contributor to this as well.
I think so too. Let's see how the small caps are reacting here, Ray. As we take a peek here, we've been in a bit of a leadership position here. The Russell has been outperforming quite nicely for us, as it turns out. Now, we got pushed back, but everything you see in here with my levels I've noted here, 26, 25, that's no longer valid as it relates to the 20-day. But really, the break to new short-term and all-time highs, by the way, on the Russell, and then the throwback to that 2600 ledge, coincident with the 50-day moving average and my manual trend line, that looks like what many traders, Ray, would just call a standard throwback to support for a support check back. Yeah.
Nicely drawn, I may add.
Thank you.
Right on it. Yeah. And so, yeah, I think you nailed it on that one. And, breaking that 20-day moving average you have right there. It's holding it right now as it opened, even with we had a pretty good Friday, obviously, and but they're holding pretty strong. I mean, a little pullback, but it's not as deep as some people I think might have thought it was going to be. Like you get that big 900 point move, and the down is it's not retracing as much as people thought. Same here with the Russell. So I think
my takeaway from Friday's action is when you look at what happened here, we had an excellent test of the 50-day. You finished awful, ugly at the lows essentially on Thursday, and then Friday you get a close above that low day's high, and it was well above that low day high. So I think a lot of traders are going to look at that as a potential entrance opportunity with today's action. If you're looking from momentum basis, a trader who watches the Russell trade through that 2676, which is essentially Friday's high, it's possible we could see some momentum trade to the upside there. You could also point out that we broke the downtrend in this brief pullback, which was in that 2 to 3 week window following the high, which again coincides with common expectations on pullbacks. But you're right, Ray. Yeah. The fact that we've held that 50-day was, I think, a key level, because if you'll notice, the last time we held the 50-day, we rallied and made new highs. I think traders are potentially expecting something similar with the Russell. The reason I find that to be so interesting, though, Ray, is that when you look at the 10-year yield, the thing that I take away from this is from a technical basis, an improving chart from a bullish standpoint. Now, we don't necessarily apply technical analysis to yields, but Ray, if yields are elevated and intended to stay elevated, I'll tell you, it's really impressive the way that the Russell is managing this. I know that we're bringing in a new Fed chair and the administration wants to shove rates lower, but they're actually holding up. So it's important that we evaluate what's happening, not necessarily what we expect. And the Russell is really holding up incredibly well in spite of all that.
Yeah, and we say this a lot in classes: trade what you see, right?
Yes.
And what we're seeing here is what you nailed it. It's holding up strong. So to go against what you're seeing it can be dangerous sometimes. So yeah, as they say, it is what it is.
Mm-hmm. You say it can be dangerous. I think what you mean is it can be costly as well.
Yeah.
If we trade maybe our thoughts, our preferences, as opposed to what we see, that probably means we're applying more emotion to the trade than we really want. And I think you and I have learned over the years, probably are better off without that emotion tied to the trade. Yeah.
Yeah. I've been
easier said than done, right? So there's a look at yields quickly here. I definitely want to talk about the semi. So let's peek in on the SOX, which got thrown back to the 50-day. boy, Ray, again, volatility
Yeah.
is key, but a throwback right to support. Again, these are standard expected moves, more or less, right? New high, 2 weeks down, find support. In this case, right at the 50-day yet again.
Yeah, the 50-day held, and then right now the 20's holding strong. Where
Yeah.
it bounced up, and look at that, already showing some positive action going on right now. Yeah, look at that.
Mm-hmm. So
Um,
from a basis, Ray, of maybe establishing one's view of the trend, horizontal support at the last lows, coincident with the 50-day. Some traders on a close under the 50-day might lighten up on semiconductor positions. As you can see, you just said it, with the 20-day, we're bouncing off of our intraday low is right on the 20, and we are now moving to new short-term highs through Friday's high. I was just talking, Ray, about that potential for the Russell when you start moving through the prior day high, particularly following a hold move like we got Friday, a close above the high of the low day, it can turn into a momentum-based move.
yeah, and and you're seeing it already this morning. It's in a few minutes from open, and it's already showing that positive movement. So yeah.
All right, Ray. Last big one we're going to hit on here are the transports. They're actually leading us to the downside today, but when you look at the run they've been on, you really can't fault them, can you?
No, as a matter of fact, I know this sounds kind of weird, but I kind of like seeing some of that because it sets up for those flag patterns that we like to look at.
Oh, yeah.
And, it's not there yet, but look back in December or November, December, you had the same type of thing going on. Actually, a little more of explosive move more recently back than December showed.
Mm-hmm.
Yeah. But, again, trade what you see.
That's right.
Look at the charts. Don't get antsy. Let it play out, and watch it.
It's not easy to fall back on those idioms and axioms, as we call them, right? Those thoughts that are pervasive amongst the market, that the trend is more likely to continue than to break, is really a very common one. And so a trader who's looking at this saying, all right, you've got a group that's rallied really well. Is like we've just seen with the SOX, is the expectation that a pullback to the 20-day would provide bulls an opportunity to participate here?
Yeah. And again, you got to go where you see there. If you're a permanent bear, I feel for you sometimes out there because it's not what it is. It is bullish right now.
Yeah.
And you got to understand and trade to that, or at least plan to that,
Yeah.
One of the things that I think a lot of traders get in trouble with is they want to see it go a certain way, whether you're bullish or bearish, and that can get in the way of your of logical thinking of, well, what's it doing,
So true, Ray. I mean, it's so we say it all the time, that it's not an easy process, right? No one knows what definitively is coming next. But what we can do is we can base our entrance and our exits on our positions on the price action that we've seen, and areas under which and above which we either get less comfortable or more comfortable. And we simply, when we're more comfortable, add more money, and when we're less comfortable, we pull that money from the portfolio, we build cash, and we look for other opportunities. I think it can be that simple. Right now, when you're looking at the transports, it's apt to be a brief pause, whether that is consolidate, hold the level and go sideways, or pull back and find support at the 20-day. We could find support at the 20-day, Ray, next week and not give anything back in price level. It would just allow the 20-day to rise. That's another way this can happen. So the expectation shouldn't be that we are due to drop, but rather we have expectations for something to happen next. Do we move to new highs? And how will I act? Do we pull back to the 20-day and hold? How will I act then? These are the thoughts we have to kind of carry all the time, aren't they, Ray?
Yeah, and I like when you always hear that, well, it's too high. It's at its all-time high. Can it go higher? Well, if you go back a week, you could say that back a week ago too. It was at an all-time high. So yeah, it can go higher. And I really like how you use the 20-day moving average a lot. And folks, look at that. Look at that riding along the 20-day moving average.
Yeah.
right? And not that it's a guarantee by no means, but if you watch what it does, whether it's above or below it, it's been following it really pretty tightly, and you can
Yeah.
use that as some planning, if you will.
Yeah, we've been above it since November 21, have held it on a closing basis since then. But it
Yeah.
really got going when we took out and made the new short-term highs when we got through this level. And I
Yep.
think that's another great reminder about technical analysis. When we move through areas of resistance, commonly we see a trend in the shorter term develop. Sometimes it's the 10-day moving average. Sometimes it's the 20-day that provides support like we see here. Sometimes it's the 50-day. But the point being, when you move out of a range or you make a move to new shorter term highs, you commonly will see trending thereafter. Not every time, obviously, but commonly. So I thought that was notable. And if we're looking in the transports rate, it's always helpful to take a peek at the three real components of the transports, those being the truckers, which looks very much similar to the whole space of transports, right? So we're clearly moving products across the country. We can also say something similar about rail stocks, which broke out and are now giving you a bit of a bull flag. And so, Ray, we're not seeing the trend just yet in rail, but it is notable that we made that move to two new highs in the short term through that resistance. Could traders maybe be thinking now we're going to see the trend shorter term working here in rails?
Yeah, and I know we're going to get to this eventually here as well, but you got to look at the fuel costs.
Okay.
All this is pretty heavily tied into energy and what's it cost to move these things? You know what I mean?
True.
So,
In fact, let's hit up air real quick. So air is the last leg of the stool, if you will, relative to transports. You can see we got these at a 52-week high as well. And you mentioned oil, so let's peek in on oil, and we're going to dovetail off of oil to talk energy, which is our year-to-date leader, everyone. Let's look at oil, which seems to be suddenly bullish, Ray. I say suddenly. It's been improving. But how about this action of the last 2 weeks over the 200-day moving average in particular?
Yeah, so a little not a little, but a pretty hefty bull flag forming up right there, you might say.
Sure.
And, bouncing right off that 20-day moving average. You got that crossover a little earlier, the 20 and the 50.
Mm-hmm.
And looks like it's holding that level of resistance that it broke, now new support, and holding it strongly. And so it's looking fairly bullish.
So I guess the question, Ray, as it relates to having seen the transports improving, we're also seeing oil up significantly. Right now it's up $9 a barrel off the lows, which is what, 18%, almost 20%. So does that mean that the oil and maybe the truckers, relative to oil moving higher, the trucks and the airlines, have they been maybe taking internal positions in oil to protect themselves against a potential rally? Because if we're witnessing oil moving to the upside, you would think that would put a little bit of a headwind against trucks and airlines.
They kind of repel each other at times.
Yeah, like magnets, right? You can't push them together.
Yeah. I mean, I don't know what if they've done to protect themselves, but you usually see those kind of things, moving in counteraction. Fuel prices go up, transportation comes down, vice versa, because of that inverse relationship they have with each other.
Mm-hmm.
Or they're looking at maybe it's stabilizing a little bit better from some of the latest geopolitical things that were going on with the energy. And now that it's stabilizing and it's being a little more of a positive spin to it, if you will,
Sure.
Maybe they feel better about it, transportation, because they know that, well, now the energy is going to calm down or get stabilized better, and we can, and then that industry helps out that industry with transportation.
Okay, so maybe what you're suggesting is potentially that we've got more clarity. And that makes it easier to predict, maybe, and that makes doing business a little bit more easy as well. Okay, That makes some sense. Before we move off and take a peek at energy, like I said, we're going to dovetail from oil to energy. I just want to remind you all as it relates to the future symbol that we use here in Thinkorswim. Remember that futures and futures options trading, this involves a substantial level of risk. And in order to trade those at Schwab, you do need to be prior approved. So we ask you to go through your requisite steps. So please read the disclosure statement for futures and options and make sure if you're ready to trade them that you're approved to do so in the accounts where you would like to do so. So let's peek in on that energy trade here, Ray. Like I said, this group has been fantastic. I mean, that's an excellent rally, broke my downtrend line. Let's put this a 2-year chart so you can see the downtrend line off of the original peak from April of 24. And when we did that, boy, did we take off. And I know, again, you're not going to see this every time, but Ray, it goes right back to what I said a moment ago about moving out of a consolidative period. We often see prices trend thereafter, and that's exactly what we've gotten out of the energy space here. So now the trouble is, Ray, I say trouble, but if you're trying to manage risk with energy to the 20-day from where we are right now, the trader who wants to be using the 20-day on, so let's say they want to they'll sell on a close below the 20-day, they've got to give up 7% to do that. That's a pretty significant move in a broad sector like this. Yeah,
and it's been moving. Nothing says it can't stop doing what it's doing.
Yeah.
Yeah, I mean that's a pretty hefty pullback to do that. Not like it hasn't done it in the past or it can't do it, but yeah, I mean, if you want to be cautious and see what could be out there to get some of that pullback if it should occur, I think that's a good range to look for. It may not like it.
I may not want to give up that much, but if there's another way to do this, of course, some traders will look at, maybe today is the high trade. We do have a new high. So if today holds up and we just kind of close as this candle looks, maybe the trader will take profits or sell some if we trade or close below the low we make today. So maybe tomorrow into the rest of the week, that might be a thought. Other traders, you might consider changing from the 20-day moving average in orange. Let's maybe make it a 10-day moving average. Now it's a lot tighter, right? And boy, Ray, we've actually held the 10-day back to December. So that's not terribly awful either. A 10-day looks fine. It's only 30 points away approximately. So that might be a little more comfortable for some traders too.
Less painful. Yeah, a little less painful.
But, some traders like moving averages. Some like to rely on a close below the low of a high day. Some like to sell into strength. We are all different as traders, but knowing that there's a different way to go about it and then going with the one that works for you internally, emotionally, comfortably, that's really the key to being a good trader, isn't it, Ray? Knowing who we are individually.
Oh, man. And I'm so glad you said that, Kevin. Just this past weekend when we were in Sacramento, we have a little fun in class with it there's no one best indicator, right?
Right.
And you got to go with the ones that you use, that you understand the most and the best to help you make informed decisions. And that's what you got to go with,
That's right. That's right. I think that's the hardest lesson to learn as a trader, Ray, was the reminder that I'm going to be wrong. I'm going to be wrong, probably a lot. How do I manage being wrong and still look to be profitable over the long haul? And that's what trade management's all about, right?
I won't tell your wife that you said you're going to be wrong. I'll leave that.
I appreciate you not sharing that with her. Thank you. Okay, Ray, quickly, what I want to do here is move to the Market Watch tab and just highlight we're going to look at a couple more sectors here briefly, but I got to point out, this is a vastly different market than what we saw in the last 3 years. And the reason I say that is our leadership. Look at our year to date. We talked energy, almost 20% up in 5 weeks. Staples crushing to the upside, 13.5. Materials and industrials all up double digits year to date. And Ray, that is not a terrible thing. It's perfectly fine. It just probably means we cannot expect the level of returns in something like the S&P that we have seen over the better part of the last 3 years.
Yeah, or at least can't go with the traditional, walk through what's driving everything. You got when you go back to that Market Watch tab you had, and if,
Yeah.
I think it's a good one that folks should put in there is that S&P the sectors, because I mean, watch that and
Yeah.
watch how it's changing from when people ask about, well, do you really need to rebalance portfolio sometimes, or do you need to look at other things? The answer is yes, you do. And
I'm
it's right in front of you, and if you ignore again what you see, then you can't come back and say, well, the real estate, it was hot a while there, now it's not, but I'm going to stay in there, and I'm going to forget that the energy is what's moving it. And why would you do that to yourself? You know what I'm saying?
Absolutely. Absolutely. Recognition that a market we had going for the last 3+ years was just, tech and AI driven. That was opportunity. And for that window, we could see it playing out in the return detail we had. But this is different. And it's not to suggest that there won't be opportunities in those tech spaces, but they just aren't our leaders. And if you want to trade leaders, right? Leadership is commonly a way that investors and traders will stay ahead of the game, so to speak. And obviously, you're never going to be guaranteed any level of profit or probabilities in your favor necessarily. But the idea is pretty simple. You go with what's working until it's not. And when it's not, you look for what is working. And we've got some groups that are doing just fine that are just not technology relative. And you look at what tech's doing, we're down 2% on a year-to-date basis. Discretionary is down 4%. These are the groups that had been giving us lift and leadership, and they're just not doing it now. So be aware. Look for the opportunities in the spaces that are moving. So this is the materials chart. Let's take a quick look at the staples, which has just exploded. There's another resistance level, Ray. Got through resistance on the 2-year chart. And what happened? We exploded. We shouldn't be shocked by that, should we?
No, I mean, it was right there, especially when it broke out. I mean, look at, classic flag pattern right there. And then it exploded right through that resistance level. And it didn't just move slightly through it, didn't just barely break it. I mean, it crushed it. So yeah, there it is. And I like the RSI down the bottom. Even though this is, it still measures it. It's price is price. You can't think, because it's it's in the higher range of the RSI, well, it's got to pull back. No.
I mean, I can't say it's too high, Ray. It can't go any higher.
Yeah. So,
I could say that. Done. I could easily be wrong.
It's done. Not going
That's the truth. So again, an interesting takeaway here is leadership in groups that have been A, lagging, and B, that are tied to what many traders would suggest is a value proposition more so than momentum, right? Big move in the space. But the question becomes, is this the flow of money away from growth and potentially into value, which is to say dividend yields, improving returns in that way, and a willingness to take on a little bit of equity risk while earning a dividend? That seems to be what's kind of in play right now.
Yeah. And so you said something kind of important right there about the flow. And remember this, folks, typically the money doesn't just leave the market when a certain sector or industry, switches. It goes someplace else. Right? And that's what we do as retail investors. We kind of go with that. And so when you see it moving other places, it's not really the retail investors moving all that. It's the big money moving all that. Follow it.
Yeah, that's the idea, Ray. Yep. That's the idea. We don't have to make this difficult, right? We can keep it pretty simple. We often like to say, I think Charlotte hit it right. Fish aren't biting there. Pull up, go to another spot. I just got done. I was gone for 3 days. I was ice fishing. And when you're drilling holes, you really have a limited amount of information, right? So if you go and drill a hole and you find that the hole's not deep enough or there's no fish there, well, you got to go drill another hole and keep scouring, looking for your opportunity. And that's exactly right. We like to fish
Kevin,
in a well.
That's my spot.
Right?
That's my spot.
Hey, you can have that spot, but if there's no fish there, it's going to get chilly and boring. Okay, so let's make this what it is. Let's go where the fish are. I think that's a great analogy, Charlotte. That helped out quite a bit, actually. Now I talked about materials, but I wanted to make sure that we looked at some precious metals, Ray, because that trade has been very volatile of late. So let's talk about precious metals. And again, we're going back to the future symbol. So everything I said about futures and so forth previously, please bear this in mind. Ray, I think the volatility scared some traders, but when we look at the trend, did we do anything of consequence with this pullback? Because that 50-day sure looks valid here.
Yeah, matter of fact, Kevin, you kind of talked about this earlier on some of the earlier charts with that pullback. So if it's going to pull back, you're going to pull back 7%,
Yeah.
And I think it did. What is that?
I think it may have gone more. Let me just double check here. Let's see what I don't like to do math, Ray. So if we go peak to trough, we see, how about 21% pullback in gold?
Yeah. So
how's that?
Yeah, that could make you heart skip, And but look where it went down to. Look at, that is, what's that moving at? It's the 50.
That's the 50.
Right on it. And then even the horizontal support you just drew, right on as well.
Yeah.
So as technicians, that's why we put those in there.
That's exactly right. That's exactly right. We don't know if it's going to get there, Ray, but if it does, hopefully there was a plan to take action at that level, right? Yeah. And clearly there was, because look at the tail. There were bulls who were waiting for that move, and they stepped in.
Yeah, and so one of the things that's really, I'm glad you said that, because I was looking at the same thing, the hammer right there on support. And folks, if you've been to many of our classes, I know Kevin does a great job with this, and many of the other coaches, when they teach this, a hammer pattern is a great pattern, but where is it most important? At a level of support. And when those, when it tested it, and who came right back in screaming in? Yeah, the bulls. Yeah. And there you go. And you're seeing some results of that, in my opinion.
Yeah. I mean, the move up right now, we're already 15% essentially off that low. That is a very speedy ascent. Something similar in silver. Probably don't need to belabor the point. Now, this one broke down a little bit more. Ray, some would probably suggest that's tied to the fact that it was parabolic to the upside. I mean, gold's been a little bit more consistent, whereas this was a bit more just straight up until it broke down.
Yeah. The metals, it's I don't know. I think some of the metals, again, especially with silver, and all the technology-driven activities going on with AI and the building, and are we going to get enough silver to be able to handle all this stuff? Maybe there was a little bit of I don't know. In fact, I consulted the ball. I didn't get all that information, but.
Boy, Ray, I gotta say, this one 47% from the peak to the bottom. That was a significant drawdown. I guess we'll see if it holds the 50-day now. That would be what bulls are looking for here.
So it's floating, but it's pulled back.
Oh yeah,
to that level. So
let's see. There's one more I wanted to hit before I got some stock in the news, and this one's actually on the crypto side. So let's just look at Bitcoin briefly, and then we'll move on. Remember, everybody, digital currencies like Bitcoin, these are, of course, highly volatile. They're not backed by a central bank or government. These lack regulations, consumer protections, etc. So there's high level of risk here associated with Bitcoin. But Ray, we've seen a breakdown here. I had that consolidation drawn in. We are consistently below the 50-day moving average. Our last attempt above it was very short-lived.
Yeah, and then it sharply broke that support level. Hey, Kevin, what's that, 1 year? Go
yes, it is.
Years, see what level that is that hitting the level of support right there? I bet it is.
Well, it is it's close. Yeah. I mean, there could be some traders would maybe draw it back here.
Yeah.
But it's, where is that? About 54, 53 and a half?
Yeah. So
But
you
yeah,
can see that.
it certainly could be an area of support, but it's too early to know. Would you agree?
Yeah. And if you go back to that resistance level, about 60, about 70.
Yeah.
Go up. Right. Yep. Right there.
I'm going to snap another line, just duplicate this and move it up
Yeah.
right to there.
Yeah. Then maybe we're finding that new spot, that spot back there again from the past.
Yeah, that's notable. This has been a real hamper on some of the so-called proxies that you might see in the equity markets, but significant breakdown here. Remember, when you're in the midst of a downtrend, as we were, a break of the range can dictate the next move, and you got a head fake breakout, and then you got completely thrown back. So it was a fake out breakout that turned into a bear trend thereafter. So, cautious and be cautious on rallies, I think, is one thing to be reminded of here, Ray, as well, because a rally into former support could be just a resistance test. This white line could easily be recolored to red and make it a little more valid now that we're below it.
Yeah, I agree.
So that bears watching. Everybody be aware, or at least cautious there. We've only got about 5 minutes left, Ray, and there was some significant news in the healthcare market, and I wanted to bring this up, so I thought I could highlight healthcare here, which is holding up pretty well. We still got that 50-day moving average in here. The space has been doing really well relative to the rest of the market. Notice that we've essentially been outside of last week here, essentially above the 50-day back to August of last year. So an improving space. I'm going to put HIMSS in the chart, and this is going to be unfortunate, but HIMSS is in the news because they are going to stop offering access to the semaglutide pill. They stated that since launching the compound pill on their platform, they've had many conversations with stakeholders across the industry and have decided to stop offering access to this treatment. They state that they remain committed to millions of Americans who depend on us for access to safe, affordable, personalized care. But Ray, this led to downgrades in price targets, which we know aren't guarantees. But when Citigroup and Bank of America are all lowering targets because of this, it is not a good situation for HIMSS here.
No, when we do this in class a lot, and we say, what could change the direction of a price, and news can do it. And this is the kind of news that a lot of companies don't like to put out. But they have no choice. And they're on top of it, but when people see that, they're like, well, we'll see on top of it they are. And again, you gotta trade what you see. And it's unfortunate. But yeah, it's you hit it on the head right there.
I got to bring up some counterparts here. So HIMSS is moving out of this space, and the thought process is that it could benefit your Novo Nordisk or your Eli Lilly, which are more likely to offer us actual FDA approved drugs. But the big reason behind all this decisioning by HIMSS, I believe, is that it's tied to the FDA announcing their intent to take steps to restrict the active ingredients in the GLP-1s that are intended for those FDA approved compounds into so-called generics. So they're basically greatly limiting the ability of the companies that are offering the generics to suggest that it's the same thing as what is the FDA approved version. So it really hammered HIMSS. We'll see if Lilly and Novo get a bit of a benefit from this, Ray, but it's probably a little too early to tell just yet. But I thought it was a really important news story relative to these three main companies for sure.
This just broke, didn't it? Like
overnight.
Overnight, wasn't it? Yeah.
I think so.
Yeah.
So big bit of news as it relates here, Ray.
Yeah, good pickup. Yeah.
Now, Ray, one of the things we're going to wrap on here, and because I only get you one a month, and I just got to say that we love our opportunities to get out and see our clients and our friends that come to these events, obviously, and those that are here in the chat. But Ray, we're going to highlight real quickly what we've got coming up, because I want to make sure that everybody here knows that not only do we do these day-to-day classes for you, but we've got the in-person events. And Ray, we're going to be in San Diego coming up at the end of the month here.
Yeah, we're going to have the Market Drive one-day event It's going to be a great opportunity for folks to get out there and look at the market as a whole. What's going on? Big, a little bigger picture. And
Yeah.
then we drill down in there to what are some things you can do. You can see we're going to Atlanta. Hey, and then March, look at that. End of March, right there in
Yeah.
Kentland, Denver, Colorado. We'll be out there. So you want to come out and check us out, see us in Denver. I think if you scroll down, folks, you can, when you're at home, we got almost the entire calendar filled up. You're gonna come out here and see me in Dallas coming up in April. Going back up to Northeast into Boston. Haven't been there in a while. It's gonna be fun to be out there. The thing, folks, is these do fill up. They actually fill up.
Yeah.
We stop, and some of you can attest to that. So get out there. I know some people think, but it's free. Yeah. And when you get there, you're going to go, I can't believe this is free. This is the best education out there. And so, yeah,
it's about as much fun as we can have, Ray. Let's be honest. I mean, you've been doing it only for 20 plus years, so we know you must enjoy it. I'll tell you, I can't get enough. I'm ecstatic when I get to come to these. We have that big one in San Diego. The one in Denver is going to be great, obviously, but any chance you have to attend, we would invite you. Not only do we offer up, we of course take care of parking, take care of lunch for you as well. But we bring our trading solutions representatives with us. We put them in the common space. They've got Thinkorswim out there. You can ask them questions, very specific questions. If you want to talk strategy, you want to talk platform, you've got all of that available to you. So please consider it. Check out schwab.com/coaching to gain access here. We'd love to have you register. Come out and shake some hands and say hi. We'd love to see you at an event. So we're going to wrap it there, everybody. Really appreciate you all joining us today. A big thanks to you, of course, Ray. I look forward not only to seeing you at the end of the month, but we'll have you back in March. We'll do this once again. But big thanks to Brent in the chat as well. Follow the three of us on X. Make sure you're subscribed to the YouTube channel known as Trader Talks. And if you like the discussion, hit that thumbs up button for us below, because we get these reviewed and into our archive for you, and that'll help us out on the replay quite a bit. So with that, thanks for being here. Thanks for participating. Have a fantastic rest of your Monday, everybody. We look forward to catching up with you again real soon.